How to put an LLC inside of a trust in Georgia. And you set up a trust so that the business will avoid the probate process and go directly down to your family when you pass away. The mistake that most people are going to make is they forget to transfer the membership interest out of their name into the name of a trust. And when this happens and you pass away, the business will have to go through the probate process before it can be transferred out to your family. When this happens, your bank accounts can be frozen, the tenants may not know who to make rent payments to, and they may stop making payments altogether. Your family cannot sell, refinance, or mortgage any properties inside of the LLC. It could take 12 months from the point of you passing away to the point of your family taking over the ownership of that business. And if your family needs a probate attorney to help them transfer that business down to them, it will cost them anywhere from $5,000 to $15,000. Now, the good news is that it's 100% avoidable. All you have to do is transfer the LLC into the trust, and it will avoid the probate process and all of these headaches. In this video, you're going to learn which types of trusts work best for LLCs, how to transfer the ownership legally and clearly, common mistakes that we see that undo everything that you're trying to do, and special rules for multi-member LLCs, taxes, and loans. So first thing we need to do is pick which type of trust we want. We have two main options here, which is going to be a revocable or an irrevocable trust. Now, a revocable trust avoids probate, and irrevocable trust gives you asset protection. With a revocable trust, you can be the trustee and the beneficiary. With an irrevocable trust, you cannot be the trustee or the beneficiary. As an example, a trustee would sell a house inside of a trust, a beneficiary would be able to take distributions from the house inside of that trust. With a revocable trust, you can change, amend, or cancel that trust at any time. With an irrevocable trust, you cannot change, amend, or cancel at any time. It's a permanent structure. And with a revocable trust, you're filing those assets on your personal tax return. With an irrevocable trust, you're filing them on the trust tax return. Giving up control and putting those assets on the trust tax return and removing them from your estate is what gives you the asset protection. So a quick rule of thumb here is going to be, if you want flexibility, use a revocable trust. If you want asset protection, use an irrevocable trust. Step 2 is going to be checking your LLC operating agreement to make sure that your trust can actually own the membership interest. You want to check for things like transfer restrictions, consent requirements from other members of the LLC, and any buy-sell clauses that would affect any transfer of ownership into the trust. Step 3 is going to be, once you have checked and fixed the operating agreement, you want to assign the membership interest into your trust. You'll need a simple document called an assignment of membership interest. This will transfer your personal ownership of the LLC membership interest into the ownership of the trust. You'll want to clearly state the name of the trust. This will be something like John Smith Family Trust, dated January 1st, 2024. Important tip here, you are not transferring property titles, just the membership interest of your LLC. Step 4 is going to be updating your internal LLC documents to reflect that the trust is the new owner and you no longer have any ownership interest in it. You'll want to update your membership ledger, the certificates of ownership, and the operating agreement to reflect the new owner. This will keep your LLC compliant and reduce the amount of disputes that you could face later on. Step 5 is going to be notify your bank, your CPA, vendors, or any other stakeholders that you may have. This is for if you have bank accounts, a mortgage or commercial loan, or any vendors, tenants, or service contracts for that LLC. You'll likely need to update all of your records and notify any interested parties that the ownership has transferred out of your name and into the trust. Banks are usually fine if it's a revocable trust because you still have control and benefits over the assets inside the revocable trust, but you will raise red flags with an irrevocable trust, and you'll want to work with your lenders to make sure you are compliant for any of their requirements. Now, here's a quick checklist recap. The first thing we're going to do is choose which type of trust we want. Then we're going to look at our operating agreement and make sure we can actually transfer the membership interest out of our name into the name of a trust. Then we will actually make that transfer using a membership assignment. Then we'll update the LLC membership records and notify any banks, lenders, or other stakeholders that we may have. Now, common mistakes that we see all the time when people are trying to set up an LLC combined with a trust. The first one is going to be that you set up the LLC, you set up the trust, but you never actually transfer the membership interest into the trust. Again, when this happens and you pass away with the LLC membership interest in your personal name, it will have to go through the probate process, and it's going to take 8 to 12 months before your family can take over the ownership of that business after you pass away. During that period of time, your family has no control over the business because they do not own the business. Your estate owns the business, and the probate courts are in control of what happens with that business. Mistake number 2 is skipping the required approval. So you have to get written approval from the other members if you have a multi-member LLC, otherwise you could end up in lawsuits down the road. Mistake number 3 is going to be triggering tax events. So if you have your LLC taxed as a partnership and then you transfer into an irrevocable trust, you could trigger a capital gains tax event. Mistake number 4 is violating any loan terms that you may have. Some lenders will have restrictions on the transfer of ownership of the LLC out of your name into the trust. You want to make sure that you are talking to them and meeting all all the requirements that they may have so you do not have any of your loans called due. If you want help putting your LLC inside of a trust so either you can avoid the probate process with your business and send your business directly down to your family when you pass away, or your business has asset protection from any of your personal liabilities like a divorce, lawsuits, or creditors coming after you, click link in the bio, fill out the form, and schedule a time to talk to some of our team.